Hey everyone, thank you for being here. My name is Uddhav. I'm the co-founder and CEO and core contributor to Friktion Labs. We're a risk management and portfolio management protocol on Solana. And today I'm really lucky to be joined by Shiliang Tang from LedgerPrime and
Right.
Tristan Yver from FTX. Just give them a round of applause. Thank you guys.
Tristan.
Yeah, just to set the stage for today, we want to talk about the future of DeFi. I'm not sure if anyone here is familiar with DeFi. If you are, would you mind raising your hand just to get an idea of who's familiar with DeFi? Awesome. So DeFi, known as Decentralized Finance, is a set of kind of money Legos built on top of blockchains, which allow access to financial applications, services, exchanges, natively to various blockchains that we've all worked with. And today we're here to talk about the future of DeFi, get some hot takes from these guys, and see really what DeFi is going to be about for the next few years. So to get started, love if you guys could intro yourself and share a little about what brought you into DeFi and what excites you about this space today.
Yeah, so my name is Shiliang Tang. I'm the CIO of LedgerPrime, multi-strat, hedge fund, purely in crypto. Do a lot in DeFi just in terms of actively trading it. Anything from like DeFi, CeFi arbitrage to market making for various DeFi protocols. We do some investing in various DeFi projects as well. I think for me, personally, I've been kind of touching the DeFi ecosystem, since an early stage, like Ether, Delta, and MakerDAO in the early days. But as a fund, as a strategy, all of it really wasn't, I would say, scalable in terms of being able to deploy an active, large amount of capital, probably until, I would say like DeFi summer, like 2020, where like, after Compound introduced the whole liquidity mining concept and launch and all these like yield farms proliferated, then we started to get into the space a lot more actively. But yeah, looking forward to kind of what DeFi V2 and V3 will look like.
Hi everyone, I'm Tristan from FTX US, formerly at FTX.com. I've been with the company for about 2 years now, and my true introduction to DeFi happened in DeFi summer of 2020. We were part of the consortium that worked with Serum, which was the first central limit order book on the Solana blockchain. So as a part of that, we had one decentralized application on the blockchain, but there weren't any other applications on that blockchain. So a lot of that was helping grow this ecosystem and bring other projects in to build. Now there's actually quite a lot of them. Friktion is one of those. So it gave us a pretty deep perspective into what it means to build a DeFi ecosystem, into what all the different primitives are in this case. But going back to 2017, yeah, like Ether Delta and IDEX and all of these different like very basic DeFi protocols that have come a very, very, very long way already. And hopefully we have a lot more to do.
Awesome, yeah. I mean, Serum is a fantastic example of a primitive that was made on Solana, which allows anyone to access and compose on top of a central limit order book. And as you mentioned, Friktion is a protocol that utilizes this infrastructure in order to build our products for end users. So thinking about the end user, who do you guys see as the type of end user today that majority interacts with DeFi, and how do you think that'll change in the next year or two?
I think right now it's still a lot of financial speculation, right? So I think a lot of the early users, adopters, I mean, there are obviously are some like individuals and whatnot, but it's kind of equivalent to like a tech product where you have this, early users that are using it. But like in crypto right now, I think a lot of it is still just financial like speculation, right? Like a lot of funds, a lot of like actively traded firms. Those are kind of the larger capital. I think the next stage for it to bridge the gap to, let's say, the average user or individual, I think one is just the user experience, right? Like even for funds like ourselves, a lot of the times we try to automate as much as possible, but like just the act of like bridging assets multiple times across different chains, multiple like just even clicking like around, and then there's a whole world of users that aren't really going to care about DeFi for speculation or for yield. Like how do you bridge a gap to like projects that even as simple as like payroll or something, right? Like for the world of companies and projects and individuals that want to live natively in DeFi, but have real world use cases. How do you bridge the gap between like various DeFi pools, but actually making streams of payment to individuals and employees and vendors, right? I think a lot of that still needs to be gapped.
Yeah, I mostly agree. I think DeFi at the moment is mostly used by either crypto natives or funds that are trading actively for edge, essentially. I think a big part of this is for a long time, DeFi mostly lived on Ethereum and the gas fees were really high. So for your average person, it wasn't very feasible to go and do any of the activities. I know a lot of you guys raised your hands when Uddhav asked if people knew what DeFi is, but essentially, just really quick, decentralized finance are different financial primitives that you see in the real world, usually gated behind having some type of net worth or some type of entity that can broker these arrangements for you. But in this case, it just lives natively on the blockchain. And if you have a Web3 wallet, you can go and, I don't know if you guys can hear me, you can go and you can connect directly to these different applications and use them without having any intermediary that's taking fees and things of that nature. So yeah, Ethereum was where DeFi was living for the majority. It's really expensive to use. So we're only really seeing funds or people that already had like a decent amount of crypto using it. And then we started to see a transition into, thank you. We started to see a transition into other blockchains that essentially had lower gas fees. And I think this is where we start to see DeFi used as it should be, or how I hope it will be, where it essentially allows people that don't have access for a variety of reasons to these different financial instruments to be able to leverage them to improve their lives. So some examples of this is like, if you're from sub-Saharan Africa or from India or places like this, you don't really have access to a savings account or anything that produces yield or gives you an ability to accumulate money and at the same time be earning on what you're accumulating. So taking away like relative amounts, like even if you have something where you can cheaply or almost freely deposit, say $10 and you're earning 6 to 20% on that a year, that's already something that can change someone's life in one of these regions. So for me, like, the true optimistic use case of this is that we get to improve people's lives in regions that have been completely excluded from financial systems. While I think it's cool with what we're doing here right now, like in the United States and a lot of the first world, I think this gets really interesting when it actually allows people to have better lives in other places in the world too.
Yeah, I would agree. Like just adding like one like project like Goldfinch, it's basically connecting crypto native capital to businesses like in the real world in developing countries, and basically providing under collateralized loans. So that's like a real world project that's on crypto native rails that is heavily backed by various investors and VC investors in the space. That's actually kind of bridging the gap between crypto and real world that Tristan was mentioning.
And one more thing I'll touch on is that I really do echo what Shiliang was saying as well. Not only is the adoption of this having use cases for people that really need it beyond like the speculative element or this is innovative, this is cool, like I'm going to use it, but it's where you can really abstract away the fact that these activities are happening on a blockchain where you get mass adoption, because we can't really expect our moms and grandmoms and whatnot to like make DeFi wallets and figure out how to fund exchange accounts and send the funds over and then connect that to a dApp and like parse the transaction to make sure they're not getting their wallet emptied. It's a quite complex process, start to finish usually. So I think when we get to the point where people can have applications that seem like a regular centralized Web2 app, but it's actually performing on the blockchain, that's when we're going to start seeing more of this mass adoption. And for me, that's what got me so excited about Solana in the first place. It's like the first time I saw a blockchain that you could fully abstract away the fact that it was on a blockchain. And I hope as Solana and other scalable blockchains come out, as well as layer 2s on Ethereum, that we'll start to see more of this UI, UX improvement as well.
Yeah, on that topic, Solana is a blockchain that's gotten a lot of attention in the last year, and Friktion as well decided to build on Solana as we decided to build out a suite of portfolio management tools. We'd love for you guys to compare some of your experiences and maybe how you see the end user interacting with multiple blockchains in the future. Or you, if everyone's familiar with the concept of bridges, which allow you to access multiple blockchains in sequence, and you can kind of there's some security trade-offs you make. I'm curious how you guys view the evolution of a multi-chain world, and do you think there's a role for these chains to interact with each other, or do you think we end up gravitating towards an application-specific chain world?
I think that's a really good question. I think it's still way too early to tell. I like the idea of a multi-chain world, And I like the idea of a multi-chain world, both for generalized chains, where you have the same things mirrored across different chains, but also specific blockchains. And what a specific blockchain, for example, is if somebody creates a blockchain where the entire infrastructure is purposed for gaming. And I don't mean gaming like you can issue NFTs in your game and buy and sell them and hold them and stuff, like, but where some of the core game engine is actually occurring on the blockchain. That takes lots of optimizations that most blockchains, if they're general, can't have. But if you have a gaming-specific blockchain, you can have. So I think we'll see a little bit of both. I think bridges are very interesting. So as he was saying, essentially it lets you take like an asset from Ethereum to Solana or Solana back to Ethereum, and you can actually use these things across different chains. But again, it's still very early technology, and even though it's amazing, it's still, I'd say, underdeveloped and still a little bit risky. So I think like one of the core infrastructure that needs to continue to build out for the multi-chain world to be effective are very, very good bridges. Like, I don't know if you guys know, but right now, like, one of the largest bridges has actually been down for like a week. So things like this happen, and it can really disrupt not only like the user experience, but actually the entire economies that are occurring on these chains if you can't like arbitrage it with the rest of crypto or the rest of centralized exchanges.
Yeah,
So that there are, I think that we will see more like an application specific. Right? I think we've already seen like there's, especially for data like Arweave or like Ceramic, which recently launched. Those applications and building blocks require very specific technology and use cases, and so I think. While I agree that I do think we'll see kind of a multi-chain like layer one, where I think for specific aspects like data, I think we'll actually see very, very specific blockchains for that.
Yeah, one interesting point that some people brought up when we were soliciting kind of questions for this was, what's the role of centralized exchanges as bridges? Although it's not DeFi, they have a big role in onboarding new users, and love to hear from the FTX perspective, and how do you bring new users into crypto, or particularly into DeFi, and what's the role of a centralized exchange?
Yeah, so as I touched on earlier with the example of our parents or our grandparents, essentially centralized exchanges give that Web2 experience where you can have a username, you can have a password. If you lose your password, you can recover your password. Like if you lose your keys and you don't have that backed up anywhere, like your funds just went poof. So you kind of abstract that away and you make it so people can go with a flow that they're familiar. And then you give them a bunch of really good fiat on and off ramps so that you give them an easy bridge into this world instead of between chains. And then from that exchange account, if they want to go and interact directly with the blockchain, it's just one withdrawal away from different wallets that they want to use depending on what blockchain they want to use. And what we're seeing too is as this bridge infrastructure gets more built out, it's actually exchanges who are providing a lot of the bridging. Like, I don't know what the percentages are, and I think it's probably gone down now, but for a while there, like most of the bridging that was happening between some of these core blockchains was people sort of depositing Ethereum-based assets into FTX and then withdrawing those same assets, but wrapped for Solana or like wrapped for Avalanche and things like that. So I think centralized exchanges serve as this conduit to onboard people into the Web3 space. And I think that's like one of the most valuable aspects that we bring too.
And just the user experience, right? Like a lot of these bridges don't have like an API where you can automatically kind of rebalance your assets across different chains for like a fund like ours, whereas with like FTX, there's an API, there's wallets, and like other bridges like LedgerPrime or others where it takes hours, if not days, for you to get kind of finality and confirmation of your assets to get bridged over. Whereas with a centralized exchange, it's often a lot faster. And so at the end of the day, all really I think people mostly care about for bridging is not necessarily whether it's centralized or decentralized. I think it's just the user experience and how secure your assets are. So I think a lot of times that centralized exchanges play a bigger role there.
Yeah, it's also usually a lot cheaper than bridging natively, depending on which blockchain, but for the most part.
Yeah, I think this is all more the incentive for us builders to want to make the solution more seamless to do completely on-chain, and also have solutions for users to onboard with something like FTX in the future. One really interesting part about the DeFi world is something called a stablecoin. Folks familiar with the stablecoin, there's really three types. You have collateralized, uncollateralized, and algorithmically designed. In the collateralized world, you have fiat or crypto collateralized stablecoins. And stablecoins have gotten a lot of attention in crypto, specifically in DeFi over the last couple of years as they've evolved. I'm curious if you guys see stablecoins gravitating into one of these sectors over time or tending to be really well distributed, and if you have any thoughts on the stablecoin space generally in the future of DeFi.
What do you mean with where the stable coins will gravitate towards?
Yeah, do you see a future where most stablecoins are in the algorithmic space? Are they under collateralized to be more capitally efficient, or do you tend to see domination of stablecoins like USDC and USDT where there may be different sources of capitalization?
Yeah, I think this is a personal opinion, not a company opinion, but I think in part it depends on how dystopian the world gets and where people want to see their value stored. For now, it obviously makes sense for systems like USDC to work and grow. Like I interviewed Jeremy at the end of 2020, and I think there was like 3 billion or 2 billion USDC, and now how much is like 100?
It does like 48 on Ethereum or something like that. There's like 50 more than that.
There's like, it's grown exponentially, and a lot of this is that people want to have dollars no matter where they are. The same way we see that in geopolitics, it's the same on the blockchain. Like people want to hold their assets in dollars if they're not in the crypto. So I think if the system continues as it does and people have trust in the dollar, then we'll see things like USDC continue to be strong, and USDT as well. If things really go in a different direction, people may want their stable coins to be backed by crypto rather than other things.
Yeah, I would just add people always talk about I love Bitcoin, I love crypto, everything, but people always talk about for developing countries, individuals, getting Bitcoin, to the hands of these kind of underserved and individuals who are exposed to hyperinflation and whatnot. But I think the real value often is, if they have even just the ability to on-ramp, off-ramp to USDC, right? I think ultimately it's the dollar still that can provide the most value to them, not whether, Bitcoin or not, right? So even looking at Honduras now, and this is a personal opinion, I think, they could benefit a lot more even just having, for the individuals, the citizens of the countries to have, just broader access to stable coins that they can move, globally as opposed to simply just Bitcoin, right? And then in regards to algorithmic stable coins, I'm not, 100% certain. I think you're probably referring to Terra or Luna, right? So big fan of what they're building, but I'm not 100% convinced that just given the design of various algo stable coins, in a truly stressful financial period, whether they can withstand the financial pressure and whether it could potentially depeg or not, right? So I think that's to be determined. But obviously, yeah, I agree with Tristan. I think if we're going to go away from a truly centralized world, I think we do need algorithmic stable coins.
Yeah, I really like that take. I think the stablecoin trilemma is something that's kind of underappreciated from the developer's perspective, because you kind of need something that has a peg, you need something that's scalable, and then you need something that's kind of decentralized enough to be efficient that other people can onboard. So something that we think about a lot is how does a stablecoin play into the future of derivatives in DeFi? And by derivatives, we've had some really interesting inventions all the way from perpetuals back in the BitMEX days to power perpetuals that are new instruments coming out that allow you to have unexpiring exposure to some crypto asset and pay some funding rate on an hourly basis or daily basis in order to take on that exposure. What are some of the derivatives you guys are seeing as most popular today, and where do you see the DeFi derivative space going in the next couple of years?
Yeah, I think we as a fund are actively involved in all the I guess options protocols like Friktion, right? I think we will start to see everything's about yield right now, so everyone's chasing yield. I think it's important to understand where that yield is coming from, and I think in the future the space will gravitate towards what some people call real yields. Is it yields that are generated from fees, from risk, not just from inflationary tokens, which is where a lot of the yield historically has come from. And you can make the argument that's not really sustainable in the long term. And so projects like Friktion, others, are working towards a more sustainable yield using financial derivatives, whether it's options or perps and futures for like funding rate and cash carry. Yeah.
I'm going to make one quick point on the stablecoin conversation real quick, is that one of the beauties of it is just the efficiency. Like the ability to send essentially dollars to anywhere in the world almost instantaneously is a very, very, very powerful thing. So that's one beauty of them. And then I think one of the things that will select which ones end up winning is where they're most accepted. So one of the reasons USDC is so big is because every DeFi protocol or every on-chain application has some use case for USDC. If that starts to pivot to like one algo stablecoin and everywhere allows you to use that, then I think that will also help the general pivot. And then coming back to this current question, yeah, I think a lot of DeFi has been sort of different reward mechanics for people participating in these ecosystems, and that comes from having inflationary tokens that are then airdropped to the participants. Like in Sushi's heyday, fees were high enough where it was like actually somewhat sustainable for people to do things just to stake their sushi to have X sushi, which allowed you to accrue the fees that were going through the sushi swap protocol. I think we need to get to models that are more so like that for this to be truly sustainable. But I think probably one of the most important things that has to happen for DeFi to scale is for allowing under-collateralized activities on-chain. And I think that will probably come with like different types of on-chain identities and systems like that, where protocols can have a sense if they can give you a better rate. There's like some of these hopefully decentralized on-chain sort of credit systems and things like that, because it's not very sustainable if you have to do 110% collateral to sort of do any activity on these different DeFi protocols. So I think that's going to be one of the most important things, is just to let people have efficiency of capital. That's one of the reasons that centralized exchanges have tons more volume than DeFi, is because you get way, way, way more capital efficiency, and that's useful for essentially everyone.
Yeah, I would agree with just, there are projects that are trying to build that on DeFi rails like MarginFi, right? And then true like financial composability and just, portfolio margining for funds like ours that want to, get more involved on crypto native markets and trades, but it's just not nearly as capital efficient compared to decentralized exchanges.
Yeah, one of the other big points of scalability in DeFi is what regulations do we need to be wary of, and then how do we properly tackle designing a regulatory framework around decentralized assets, and then also active participation from potentially unknown or un-KYC'd or non-AML participants. What do you guys see as the future of or what work does DeFi need to do to create a really good regulatory surface for us to continue to build and innovate on top of what we've already done?
Yeah, I can go first. I mean, I think we're going to have a fusion of things. I mean, I think we'll see some of the larger DeFi protocols start leveraging different licensed firms to do like their clearing and different aspects that allow them to fit into the regulatory space, especially for the United States-based projects and protocols that want to be completely compliant. I think we'll see international firms continue to be DeFi crypto native. I hope we can have a world with both. I do see the need for permission DeFi to an extent so that we can get a lot of this capital and a lot of these very large firms comfortable participating. They just have too many compliance mandates that, like, to give you guys an example, Jump Trading is one of the largest trading firms in the world. And they're also one of the most active on DeFi in the world. And the way they've been able to do that is to set up very, very sophisticated like on-chain analysis mechanisms that lets them know or make sure they're not interacting as much as possible with any wallet that may be a nefarious actor. But even that is a very much a risk-based approach. So they're at the forefront of this. And if you can imagine, like the tail on the other side is like people are just not going to do this until they have a completely compliant way to participate. And like what that means is essentially like in Aave, which is a borrow lending protocol, you can deposit funds and others can come and borrow those funds. Permission DeFi will be like every person that's depositing funds essentially KYC'd in some manner. Maybe they have a KYC system that gives them a token that's in their wallet that lets the protocol know that that person is KYC'd. And then the fund can come and borrow that money knowing that they're borrowing from sort of KYC'd participants. The thing that makes that a little bit less exciting potentially, one of the things that makes it exciting is like the entire world has easy access to go and participate in that. A little bit less exciting is that you can kind of get the same service on a centralized exchange. So it's not super clear what the value proposition ends up being.
Yeah, and I think at least a near to medium term for DeFi, there's already a kind of a path that we've seen in centralized exchanges world where you kind of have like onshore U.S. exchanges and the path they took, and still like offshore exchanges, at least historically. So I think for DeFi, we'll see the same thing where we see more of a bifurcated world where if you do want to serve U.S. customers and clients, you probably will have to go through the KYC route or licenses. But I think there still is going to be a large world for DeFi that exists, outside of financial regulatory countries, and as long as you're not kind of touching or serving them. Similar to how centralized exchanges are between offshore exchanges versus U.S. onshore that needs licenses and operate under a different regime and margin and collateral requirements. At least for the short to medium term, I definitely can see that, right? And we're already seeing a ton of projects. Aave, a lot of other kind of DeFi applications where there are simple things like geofencing, but even like other things where you actually have to KYC yourself. Basically the KYC process sometimes is even more rigorous than like a centralized exchange, right? So we're already seeing that kind of proliferate.
I mean, and one of the beauties of DeFi is that no one can come in and just shut you down, right? Like what's happening actually on chain. With a place that I guess like the vector of attack for this is essentially the fiat on and off ramps, how people move the money in and out. So like I think the hope of like the cyberpunks or the people who are very, very DeFi native as we get to the point where DeFi interacts with the real world, or your crypto in general interacts with the real world to a degree that you never have to essentially come in and out of the system. But at the moment, like one of the most important places that regulators can step in and just make sure everything becomes more regulated are the fiat on and off ramps.
Yeah, it makes a ton of sense. Really like thinking about what regulators need from DeFi is a pretty interesting topic, and kind of leads to this thing is DeFi takes a lot of narratives on every cycle, every quarter, every month. The narrative changes in DeFi. What do you guys recommend for people who are looking to get into the space and trying to build in the space as things to focus on as they make this decision to kind of move from traditional finance, like a lot of our team did, and come into DeFi full time?
I think one is, if you're completely new to the space, at least even for me looking back, when I first started interacting with DeFi Rails in like 2016-17 was just kind of, setting up your own wallet, interacting with it, trading it, moving it around different chains. I think you learn the most from doing that. And then if you're thinking about building, I would say don't just like copy and paste another protocol or idea and just like put on like another layer one chain. I mean, we see a lot of that, and then it's understandable because like you need like DeFi Rails for Near and Polkadot and all these different layer ones. But I think if you truly want to build something different and big and something that is not just like a replica of something else. Yeah, don't just like do like, I don't know, compound on Near or something, right?
Yeah.
I think that's not as exciting and moving the space forward.
What's y'all's favorite DeFi primitive, if you have one? It can be a concept or a protocol.
Yeah, I want to touch on your first question real quick, and
Yeah.
I think he's totally right. Just go play around with it. If you have $100 to spare, put it in a wallet. Make sure you're using a cheap blockchain, and go try as many of the dApps on that blockchain as you can. If you have a little bit more, put a couple $1,000s in. Try Ethereum. Try several of these blockchains. Figure out how it works, how the interactions work. If you're a builder, by doing that is how you'll see the inefficiencies or places where you can build something. I mean, Sam, the founder of FTX, like the reason he built FTX is because he had Alameda Research, and they were trading on every exchange in the world, so they could very easily see where all the issues were, and that's where FTX came from. So I think that's something that you can replicate. And then just in general, I would say go check out projects that you think are interesting. Go get in their Discords, see what people are talking about, get involved. Like crypto is one of the most open industries in the world still. People are still very open to being communicative, to inviting you in to help. And I think it's one of the few places where if you go and show up and just add value for free, you might very well end up with a job in a couple months in this space. So just something to keep in mind.
Yeah, that's funny. It's like exactly I got my first job in crypto is in lurking in Discords and talking to people about what's going on. I think one of the uniquely DeFi things that exists today is the ability for people to build communities through things like Discord, through conversations that start from there and protocols that spin out of there. One thing that we think about this a lot in like Friktion, and our Discord is really active in terms of users and talking about different things and trying to grow the protocol, is how do we have the best memes in crypto? And memes are this like very interesting concept where they came into crypto as somewhat sensationalized. They didn't have too much stickiness, and now you've seen entire protocols build brand value out of memes. Like two questions for you guys. What's your favorite meme in crypto? And then what's the power of that meme in your mind?
I guess like one that really strikes home is this meme where it's like a really old guy, and he's basically saying like there's like two pictures. One is like crypto is like, you know, not that stressful or not, but like, oh, like, you know, basically the second picture is showing him, it's like, oh, I'm actually like a 25-year-old. And it's like, basically, you know, for me, just having been in the space for really just 5 years, which in any other industry is not a lot of time. It's felt like a lifetime, and just seeing the changes in the past 5 years, and just how much, like, I mean, it's a 24/7 market. It's constantly evolving, growing. It's, you know, felt like 50 years.
Yeah, I can confirm. I've been in crypto since 2017, but working full time for 2 years, it feels like 5 years or something. I don't know. You kind of don't stop. So if you do want to enter this industry, get ready. If you want to do well in this industry, get ready to just work like animals, because it's kind of what it takes, because nothing ever stops and it's always continuing. I don't know if I have a specific meme, but I do think like memes are not only becoming a very important part of crypto, but just the world in general. Like memes have been around since like the cavemen telling stories around the fire, to written, and now we're having it in visual form. And I don't think this is stopping anytime soon. One person who memes a lot that I think is very interesting is this guy on Twitter called Degen Spartan. I think it's very good to have cynics who actually hate on a lot of the things that you're optimistic on, to see where you may have deficiencies in your thesis on these things. So he's one of the people who I enjoy on Twitter.
I was about to ask, who would you guys recommend we follow on Twitter after this for anyone looking to get into the crypto meme space? So that's an iconic one for sure. Yeah, he took a break for a while, but now he's back, I think. So yeah, I guess on that end, Shiliang, do you have a favorite Twitter account on CT that you recommend for us?
Favorite Twitter account. And I used to like to follow. I think there's a ton of alpha that gets shared on Twitter, especially just looking back in like DeFi summer, right, when everyone was new, and these are all these new protocols. No one really. There was no like prior kind of like copy for it, right? In the sense that like everyone was figuring out all these new projects that are launching every week at the same time, and everyone was just sharing. And I think like, you know, similar to what Tristan, going back to what Tristan was saying earlier, like it's such an open, crypto is like very, very open, right? If you like DM a person on Twitter, most of the time they'll respond, and not just like random individuals, but actually like, you know, I'm sure like Sam, right? Like he like responds all the time on Twitter, but like even just other fund managers, VC investors, they're all willing to share like a lot of ideas. So I think like just following like the largest kind of investors in the space, and you know, not only just following, but actually like actively reaching out to them. A lot of times you find that they're very responsive.
Yeah, that's very true. I think like one of the really good things to do is just like go find people who you look up to in crypto and see who they follow on Twitter, and just follow all the same people, and then you can kind of filter from there. Most of the information in crypto goes through Twitter. It's still a space, as he was saying, that's very open compared to most financial markets. Like people are very willing to share what they're up to. I think like an account that shares a lot of raw, quote unquote, alpha is mgnr.io. He's the head of a trading firm, a friend, an amazing guy, crazy guy, and he's willing to share a lot of good information. So he's a good follow in general.
Thanks, guys. I guess we have about 5 minutes left. And on the topic of alpha, I think a lot of people have this question of kind of what's a contrarian view our speakers have that may not fit into the status quo of DeFi today, but would in 2 years. Love if you guys could share something as specific or general as you want.
I think so I think like, you know, Uniswap and the constant function market making like XYK, has done a lot for the space in terms of bootstrapping liquidity. I think there still will be a world for it for stable swaps and long tail of assets, but I think that we're starting to see many projects like Hashflow, which we support, and it's basically like an RFQ style system. But I do think that for the majority of larger assets that are liquid, like a Uniswap V3 market is not very good. And I think in the longer term, we'll start to see, as layers ones, scale or as, other projects start to build like scalable blockchains like Solana, we'll start to see either more order book style, a return to more order book style markets, or just other primitives like RFQs, like Hashflow, versus just pure Uniswap, right? Because I think if you dig deep into the markets there as a market maker and a liquidity provider for liquid assets, it's not very sophisticated at all, and it's pretty detrimental.
Yeah, echoing that, I think by then almost everyone will have realized that impermanent loss is actually usually permanent. And being an LP and an AMM is not necessarily the best thing to do, and it's better to have flexibility when you're providing liquidity in the space in general. What are other things that will happen in 2 years? I think like this whole yield incentive mechanism where you can be a new project, spin up a token, give away that token, and that's enough to bootstrap your protocol is going to fade with time. I think actually the side that's going to lead the charge on this and providing more sophisticated systems of rewarding people for using your stuff is going to come from decentralized gaming or GameFi or things of that nature. So I think we'll see much more creative methods of token distribution and ways to really give them to the people who are actually benefiting these protocols, rather than if you launch a new sort of AMM and you have somebody comes in and deposits $1 billion, like we see quite often, they're not just going to take all these new tokens and be able to go sell them in the market. And so I see this evolving into things that become more interesting with time.
Yeah, we call that mercenary capital.
Yeah, awesome. Well, thank you guys so much for coming today. Really appreciate you flying in and taking some time to chat with us about the future of DeFi. I hope everyone got something out of it, and I think we may be opening up to some questions afterwards. And if not, really appreciate you guys taking the time to come join us. Thank you guys.